Larry, so good to talk to you today. So timely. Today, we get to talk through three opportunities, three financial planning and investment opportunities in a down market. As we all know, stocks recently closed out their worst quarter since 2022. The S&P 500 and the Nasdaq logged their worst performance since 2022. So before we get into how to take advantage of this down market, I do want to talk through what we're seeing, which is something we've talked about before, the concentration risk that we are seeing in the market. Basically, 80% of the market's movement due to only 10 stocks. And to see what this looks like in a different visual, this is a look at the S&P's 1 month performance. The Magnificent Seven, Larry, have lost 2 trillion since the start of the year. So what do we keep in mind when we see this much red on the board?
Well, first, Darren, everyone gets overly excitable about this much red. I mean, you can't help it. If you're an emotional human being, if you have any
Yeah.
emotions at all, that's going to be a little scary, right? But it's just that. I mean, you look at the concentration, that Magnificent Seven. They're all huge companies that are not going away. You know, Microsoft and Apple, Nvidia, Google. They're not going anywhere. So we know that this is a short term. That why that's ugly is that's why we don't have too much concentration. S&P 500 by in of itself is not a diversified portfolio. So you got to have other products in there, whether it's annuities, structured notes, whatever products. The S&P 500, that's why we do what we do by having diversification.
Right. All right. So now let's talk through how to take advantage of this down market. Number one, put your cash to work. It might feel good to kind of hoard all of our cash under the mattress right now, but that really does compromise your ability to build wealth.
Absolutely. Cash is going negative with inflation, and even CDs that did have a good run there while inflation was running so high, maybe you get 4 or 5% and feel pretty good about it. But that has come down as well. So now it just makes sense. If stuff is off 20, 25%, they're 20, 25% on sale. So it's a good time to get into some of those products that you feel like you might have missed the bus and say, I wish I'd have bought that back. Well, now's a good time to go ahead and be able to jump in there and get some of that while it's on sale.
All right. And the second strategy to consider is taking advantage of those stock losses and doing tax loss harvesting. How does this work?
Another good avenue. I mean, look, a lot of the products that we have currently, whether it's Apple, Nvidia, those kind of things, we feel very confident that they're going to come back. Sometimes you have a few that you may feel like that is not, like, maybe that stock I've had for quite a long time. You can sell that stock at a loss and be able to help with your taxes to go ahead and write that off or offset some of the gains when the products come back in. When the market comes back up, and so you've kept some of that, the lost harvesting, you can write off some of the losers and buy again more of the winners at that point.
hmm And then last, Larry, explain why a Roth conversion makes more sense in a negative market.
Well, Roth conversion again is if you have again full diversification, some other products in there, but if we're looking just at some of those Magnificent Seven or the S&P 500, we believe those stocks are definitely going to come back. Selling, converting to a Roth right now, while the market's down 20% plus since the beginning of the year, will allow you to basically buy them at a 20% discount.
Mm.
So as long as the market comes back up, now you have all that gain tax free. So it's a great time. You'll pay taxes on that conversion now at a lower rate. So it makes a lot of sense that you pay taxes on a lower dollar, it comes back at a higher dollar, all tax free.
I always love talking about the silver linings with you, Larry. It makes me feel better when, again, we see that much red on the S&P. If somebody wants to talk through any of these strategies right now to make sure that they are well positioned to take advantage of this volatility, what's the best way to reach you?
Yes, give our office a call, 615-216-1048, or they can go on our website, sfawealth.com, and there's a way to get us an appointment set up for there as well.
Great. Larry, thank you.
Thank you, Aaron.